With tariff-fueled recession fears rising, which retail stocks are built to last? Zachary Warring, CFRA analyst, joining us now with names he believes are best positioned to weather some volatility. Zachary, great to speak with you. You sent us over two stocks here, both Ross and Lululemon. Let's kick it off with Ross. Where do you see this company is built to last?
Yeah, so Ross is just like TJ Maxx. They're both off-price retailers. They're very well insulated in recession periods or in a consumer slowdown because they offer lower price goods or 30 to 60% below retail value. We really like the company because of valuation. TJ Maxx has a great business model, but their shares are pretty fairly priced at 28 to 29 times forward earnings. So you can get the same business model for a lower multiple at about 21 to 22 times.
And talk to me about a company like Ross in terms of the consumer it's exposed to within a recessionary environment. Is that a concern?
It is. They're both, both these companies, they really tend to that lower income consumer, maybe middle income a little bit, but you really are a little more insulated because, you might get some trade down in the higher income consumers looking to shop at TJ Maxx and Ross. So
yeah.
I think, as consumers continue to trade down in a recession, you might get hit at the lower income, but you might gain some more middle income consumers. And so it kind of evens out. They're not fully insulated. If, a full recession were to happen, you would see some earnings, lower estimates, but we think that's why, the valuation at Ross is very appealing.
Zach, are you not worried about producers who make their goods, say, in Vietnam, being caught up in not just tariffs, but the focus on transshipments, which has been a real emphasis of the administration during their first 100 days?
Yes, we do like companies that are out of China. We do think that, the other Asian countries are more likely to see some sort of, tariff resolution and much sooner than China. We think China is kind of the key player in these tariff debates with the administration. So we like companies that are out of China. We think it'll kind of turn out to be similar to his first term. We think the proposed tariffs on April 2nd that were delayed now 90 days, we think those are unsustainable. And we don't think there's any way that he can fight that many battles at one time. So we really like companies that are out of China.
So talk to me about your next pick for us, Lululemon, which, by the way, has been caught up in the huge TikTok trend of Chinese manufacturers saying that you can get Lululemon-style leggings directly from manufacturers in China, bypassing Lulu. They had to put out a statement saying those videos weren't accurate. Are you concerned at all about a consumer kind of boycott against a name like that?
No, we really like Lulu, and we like it because they have moved most of their manufacturing out of China. It's not even on their top 3 or 4 list of countries that they manufacture their goods from. So that's one positive. And, we've already stated that we really think that the administration can't fight the tariff front on all these different Asian countries at the same time. We think you're more likely to get resolutions out of the other countries than China. And then, we think this company has, over the years is, kind of goes in and out of favor with investors. But valuation here is just so cheap. Shares trade under 20 times, which is typically a great time to buy shares. And the price is back to where it was just a few years ago already. So, we really like the company. We think the brand is fine. They've continued to grow over the last 5 to 10 years.
Yeah.
They're not growing like they were, but their multiple shows that. And we don't expect their multiple to go back to what it was in 2020 or 2021 at 35 to 40 times.